Hello and welcome from me, Philip Nothard and Curtis Hutchinson to this week's special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Many thanks for joining us again for this in our 11th in a series of special industry leader interviews themed around sharing best practices as car retailers manage their way through COVID-19 crisis. Previous interviews with Sytner Group's Darren Edwards, Virtue Motors Robert Forrester, the IMDA's Umesh Samani and last week's chat with David Peel, Managing Director of Peugeot UK, are all still available to stream online at motortraderadio.com, Spotify, and Apple and Google Podcasts.
Now, with dealer showrooms reopening across England today, Monday the 1st of June, we're delighted to welcome back an old friend of the podcast, Daksh Gupta, Chief Executive of Marshall Motor Holdings. So welcome back, Daksh, and thanks for joining us. It's already been a busy morning for you with 117 sites reopening, a live interview with Sky News, and the release of your trading and COVID-19 update. So thanks for taking the time out for the podcast.
Oh, you're welcome. We haven't quite done the Sky News yet, or ITV. That's at 12 o'clock, and then later on this afternoon at 1:30. So, but it has been a busy morning nevertheless. So morning, guys. How you doing?
Yeah, no, we're good, thanks. And that means we've got a scoop, Dash, if you're talking to the TV networks after us. We don't have a problem with that.
There you go. See, I got my priorities right. Got you guys first. Ahead of ITV. There you go. And we've done the FT this morning and the Guardian as well. So there you go.
Busy.
Now, look, before we talk about the restart, can you just give us a snapshot of what it's been like for you personally to have been running the business from home since the lockdown started 11 weeks ago, and how you've kept in touch with the management team and colleagues across the business?
I would say I think most people know that I do put the hours in. So my chairman calls me a junkie, as in a work junkie. And I think that's probably a fair description, actually. But I would say what I've gone through in the last 10 weeks makes it look like I've been part-time. It has been very, very, very full on. If people think, we've just been, as a management team, just sort of sat at home with our feet up, it's absolutely the opposite end of what we would normally do in a normal sort of working time of running the business. So typical morning, I'm in the office for about 7:30, which is later than I normally would be. But normally I'm in the office sort of in work time around sort of 6:45, 7. But then I would say most evenings, early part of the week is sort of midnight, 1 a.m., 2 a.m. sometimes, and then it sort of gets a bit better as the week goes on. So it's been very, very busy. I would say in terms of how we've been keeping in communication with our colleagues. So we sort of planned the shutdown the weekend before Boris announced the shutdown on the 23rd. So we called the timing absolutely bang on, and we let our colleagues know on Monday the 23rd of March we were going to shut down. So that's good. So it showed we got our timing right. And then in anticipation of that, we started collecting personal email addresses for all of our colleagues so we could keep in contact with them, which was no mean feat. We had to collect over 4,000 email addresses. So we've been doing 2 videos a week. So there's been 22 videos done so far, which literally started back in February as part of the crisis and just letting people know what they needed to do in terms of washing their hands, etc. And then as the sort of lockdown period went on, we've been doing 2 a week. So I do one on a Tuesday, which is a kind of state of the nation, what's going on, what we're seeing in the marketplace, what we're seeing with the government, what we know. And then one of my senior team has been doing a video on a Thursday, and we try and make that a bit more relaxed. We have a bit of fun with that. So Richard, our CFO, did an early one, which was kind of like his impression of Martin Lewis and telling our colleagues what was available there in terms of financial support from the government. So mortgage extensions, car finance extensions, credit card extensions, etc., etc. And then we've done some music videos as well, which has been quite good fun, and has surprisingly got a huge amount of covering, actually. So yeah, that's how we've been keeping in contact with people, and the engagement has been absolutely incredible, to be honest with you.
Well, I mean, welcome back, Dash. I mean, it's been absolutely great, that you're back on the show, particularly at this time. I mean, we're talking to you on the 1st of June as showrooms have now been allowed to open again. And again, as you've just been saying there, great to watch you throughout lockdown and around the social media. And as you said there, the music video was fantastic. I mean, God knows how many views that's had now, and shares and comments. I mean, you just keep getting notifications one after another. And as you've already mentioned, we've read a trading release this morning, a trading and COVID-19 update. Do you want to talk us through some of the key points of your update this morning?
Yeah, so we did sort of put a release out last Monday, which was just to sort of say that we welcomed the Prime Minister's news to be open. So that was pleasing. But we said we'd provide a more detailed update in due course, which is what today's note was about. I think for us it was basically really sort of focused on a number of things. So first of all, trading prior to lockdown. So we sort of confirmed that the business was doing incredibly well prior to the lockdown period, and we sort of hinted at this in our sort of 10th of March results RNS, which basically talks about the fact that our order bank position was, quote, encouraging. Clearly, with 10 days in of March, our run rate was looking very encouraging indeed. But clearly, with only 10 days of March through, it was hard to sort of see whether you would continue with that momentum, particularly given where we were in terms of COVID at that point in time. But actually, what we were able to share today was how good we were doing. So. Obviously, everybody locked down on the 23rd of March, as we know, and the market at the end of March finished down 31%. Despite that, 31% market down, we were only down. It feels odd saying only because it's still down, but we were only down 10%. So a massive 20.4% outperformance of the market. I mean, that is just unbelievable. Albeit, it kind of, in one sense, it's a fantastic performance because we were 20% ahead of the market, which is phenomenal. Albeit it does feel a little bit sort of weird talking about a bit of a pat on the back, given the fact that we were down, which is understandable given the fact that we shut down in the busiest week of the busiest month. And then we also sort of disclosed the fact that our used car performance was strong. So used was down 9.7. And again, you've got to remember, you always have this month-end spike, as we know, in terms of deliveries. So that was a fantastic performance as well. And then after sales was only down 3%. And again, despite the fact you lost a week's worth of invoicing and business, with total revenues down 6.9%. So actually, you could see, had we had that last week, we would have had a phenomenal performance. So we talked about that. We also talked about what we'd been doing in the lockdown period. So we talked about we had 62 of our operations open for key workers, providing sort of emergency provision for key workers, emergency services, breakdowns, vulnerable people. And actually, we did have a skeletal staff taking online inquiries and telephone inquiries. And actually, since the lockdown period, we actually sold unbelievably 3,700 cars through that period. So new retail used in fleet, which was really pleasing. Now, again, fantastic numbers, but again, you've got to put that in the context of, in the same period last year, we sold 19,000. But again, it was pleasing to see that we sold at 3,700 because that will be added to our order bank that, of course, we didn't deliver in March, and clearly we had in for Q2. So yeah, that kind of talked about, they were the kind of key takeouts. And I think from a financial perspective, this was the thing that was really, really pleasing, is our net debt was only 3.2 million as of Friday. So given the fact we've obviously been taking losses, as every business will have been through April and May, I think to report a net debt position of 3.2 million is very, very pleasing. Recognising we have 120 million of facilities with the banks, which I'll talk about in a second. But of course, that 3.2 million has been benefited by working capital inflows because as our operations have been shut, we've been getting obviously payment for vehicles that ordinarily would be on our balance sheet. And a good example of that would be fleet. So we typically carry around 12 million of fleet debt as those vehicles have been delivered, and as those vehicles were due for payment, we've obviously had the cash inflows for that. But as we ramp up the business, those fleet debtors will go. So obviously that will then start to consume working capital. So fantastic performance on the financial side. And actually, the other thing we were pleased to sort of highlight as well is the fact that actually we've been in discussion with our banks, as I'm sure many companies will be, and they've been very supportive. And we're in the late stages of finalising our 120 million RCF. So they're the kind of key takeouts of this morning's release, really.
Now, Dash, as you mentioned, the lockdown started in what is traditionally the busiest week of the year, also in the busiest month of the year. Can you tell us what impacts that had on fulfilling outstanding new car orders, and also how you're restarting the new car sales process from today? And I guess especially with factories just restarting production, what will be the challenges around getting stock for new orders?
Yeah, I think it's going to be an interesting dynamic, and quite frankly, nobody knows the answer, Curtis. I mean, anybody who's, I think you can make judgments, which is ultimately what we're paid to do. I have to say we've been working really closely with our manufacturer partners, who I have to say have been fantastically supportive. And it's interesting, I was talking to Darren Edwards this morning, who obviously and one thing Darren and I were just sort of saying this morning, it's been fantastic how the whole industry's pulled together and worked together and cooperated to make sure that we're doing the right things for the country, for our industry, for our manufacturer partners, and indeed our own businesses. So I think what we're seeing is supply on new cars it could be challenged given the fact that the factories have been shut. That said, we clearly have a lot of build-up of stock already in the pipeline, which we would typically have in terms of consignment stock. We also clearly have an order bank that would have ordinarily been delivered in March. And I think, as you can see with our trading performance, we were absolutely flying. So we will have an order bank from the shutdown period, which would have gone in the last week of March, plus the order bank for Q2 that will be delivered. Of course, one thing that we have seen, which is understandable, is we've seen cancellations, which is understandable. Again, we're just trying to understand, how much of that order bank remains, but certainly so far, we're reasonably encouraged what we've seen on that order bank. And then clearly, as I said earlier, we sold 3,700 cars. I think what we'll see is new car supply might be challenging, particularly around EV. So that's not necessarily a bad thing, because typically when supply is tight on new, you typically tend to see margins increase on new cars, and we've seen this before with when we went through the WLTP period. What we are also seeing is new car sales are generally down. It's hard to judge why that is. But certainly at the minute, I think new car sales are down, and it'll be interesting to see where May pans out. My sort of early indications are May will probably be down somewhere around 85%. But you've also got to understand we've only had a few days of being able to do click and collect services. So June will be a good barometer, as will July, August, and September. Albeit September could be distorted, because I would expect to see a significant spike up in volumes, given the fact that a lot of customers who would have bought their vehicles in Q2 haven't had that opportunity. So it's, you've got lots of ups and downs, lots of dynamics in there. You could see used cars appreciate. I mean, I know people have been talking about used cars being under pressure. Actually, what we're seeing, and I know a lot of other people are seeing, is actually used cars in some cases are going up. Because obviously we've had a period where we've been selling a load of cars but not being able to deliver them. So you have got a shortage of stock out there generally, and you won't have the new cars generating those part exchanges. So, and then of course the final dynamic, just if that wasn't easy enough to try and predict, you also then have an underlying economy which says, well, okay, if people are concerned about their jobs, given the economic outlook out there, will people want to come out and spend? And that's probably the hardest thing to judge, is what's the underlying demand in the marketplace.
Yeah, it's going to be. I mean, there's so many sort of unknowns at the minute, like you say, and the new car market wasn't exactly massively buoyant for the last sort of 18 months, with things like you mentioned with WLTP and RDE and things like that taking place. But I think it's as you say, I think it's positive for used cars. If the new car market is a challenge, then opportunities there in the used car space. But thinking about the showrooms, Dash, I mean, obviously, we talk about the showrooms being closed since the 23rd of March. You've got 62 after-sales operations that remained open for essential workers, emergency workers, and vans, etc. As you've noted there. Did these perform? How did these perform during lockdown, and what's this sort of last week as sort of things have started to reopen again look like? I mean, is it been a really positive move as it started to reopen?
Yeah, I mean, it's I mean, we brought our people back on the 18th of May in terms of management. So prior to sort of the 18th of May, we had around 400 people in, which is around 12 or 13% of the colleague base. We then brought, once we on the Wednesday, we saw that click and collect services were okay to do. We then obviously recognised the fact that we'd sold obviously a significant amount of cars through lockdown, and we had the order bank to go through. So we decided to bring back colleagues on the first Monday thereafter. So we had about 300 people back, and then we were starting to open up our operations, in fact, last week for after sales, which of course you could always do. And then with this sort of management population to organise deliveries, we sort of got some momentum behind it. And then literally last Tuesday, we brought back more technicians. All of our operations were sort of starting to ramp up again. And in terms of demand, I mean, last Tuesday we had 1,828 people in, so about 44% of our colleagues. And last week was busy. So after sales has been very encouraging. I mean, we're nowhere near, again, just to manage expectations, we're nowhere near where we clearly were last year. But certainly last week's levels have been encouraging, and that we are seeing a significant ramp up of activity. So on Friday we were at around about sort of 60-70% of what we would normally be. But of course, it's only 4 days of trading. My instinct says, I think given there'll be a lot of news coverage and news flow on the fact that car showrooms are open, I think people will naturally watch the news and think, oh, I can now go and get my car serviced. So I suspect this week will be busier. From a sales perspective, it was busy. I'm going to say it was pleasantly busy. I mean, we sold over 200 cars on our second day of opening and on our third day of opening. So that was really, really pleasing, But again, what we don't know is how much of this is pent-up demand and what's the underlying trading going to look like.
Now, Dash, you've talked about click and collect, and throughout the lockdown, we know online activity amongst buyers has been very high as they've searched for new and used cars. I'm just wondering how you see online car buying services evolving after the lockdown is lifted.
It's really interesting. I've been, it's my 28th year in the industry, albeit I like to point out I'm not quite 50 yet. But the interesting thing is I've heard for 20 years now, online's going to kill your business. Online's going to kill your business. Manufacturers are going to go direct and go online. I've been hearing that for years, as I'm sure you guys would have been. If ever there was an opportunity to try and prove and make that work, it was from the 23rd of March, because suddenly the whole supply chain stopped. And we, along with a lot of other retailers and along with our manufacturer partners, tried to see if there were ways of being able to do this. And the reality is, it's just very difficult to do. It's very difficult to deliver a car when you've got to provide some sort of experience. It's an emotional purchase. Cars are not essential. People buy them because it's an emotional purchase. So I think what it's proven to me is our model. I always believed our model was safe before, but I think it's even more safe now, because we've proved that it's very, very difficult to execute delivering and selling cars, through online methods. Because yes, you can fulfill the first part of it, which is this sort of quote click part of it through online and telephone. The challenge, of course, when it comes down to the collect part of it, because someone's got to invoice the car, someone's got to do an FCA process, someone's got to do a handover, someone's got to clean the vehicle, and as soon as you put that infrastructure in, the economics of being able to do that are quite challenging. And of course, also customers still like to come and see a vehicle and feel, touch, drive, smell. Hence why we have showrooms. So I don't necessarily subscribe to. I think you will see an amount of people who will say, actually, this is fine, but I don't think it's materially going to change from what we've seen. And I was looking at a stat the other day which said in the US, which I think we would all accept is the most mature market in the world for online platforms, actually still in the US, less than 1% of cars are transacted online completely, less than 1%. And the internet's been there, 25 to 30 years, I guess. So, I don't totally subscribe to the theory that, we're all suddenly going to shift towards online purchasing more than we've seen before. You might see a little bit of an uptick to it, but I'm not totally convinced it's going to be, sort of 25% or anything like that. Certainly not in the short to medium term.
Do you think it's tested some of the e-commerce digital propositions that the retail network and the OEMs have got then? Do you think that's really what this has done, has really sort of put a bit of a test in place for people's systems and highlighted those that haven't got a comprehensive system to those that have?
Yeah, 100%. I mean, I'll give you a little example. We had the ability for you to buy a vehicle online about 5 years ago, because everybody was saying this is the way it's going to go, this is the way it was going to go, and I think we sold less than 20 cars on it. In fact, it's more expensive having the facility to have the ability to transact online than the vehicles we were selling in terms of profit. So we actually took it off because there just was no demand there. And the fact that we've been, and by the way, we still don't have that facility on our website, which we are just about to launch it imminently as it happens. But guess what? We still sold 3,700 cars. We still sold 3,700 cars in the lockdown period. Why? Because customers like to do their research and they still want to connect and have that conversation with somebody, you know. So we will have the ability to do that. I mean, you can reserve cars online, but I still think it is almost like a marketing tool, our website, to showcase our products on our used cars. The manufacturer websites clearly are showcasing their products, and then ultimately the consumer is wanting to talk to somebody in terms of what their options are, what the delivery times are, what their part exchange is worth, how does financing work. So I think we've all sharpened up our websites, etc., and looked at every single opportunity that's out there. But I certainly think it's going to be an evolution, as of course we've seen in the UK for the last 20 plus years.
Yeah.
Now, Dash, what's your view? I mean, there's been lots of talk over recent weeks about the possibility of a scrappage scheme. I'd be interested in what your view is on whether the UK car retailing sector actually needs a government-backed market stimulus package like a scrappage scheme, or do you think this is something that can be led by the industry itself? For example, OEMs using captive finance.
I think that the industry is at a real crossroads now. I think we already were seeing the industry, particularly for our brand partners, facing a number of challenges, principally led by the biggest strategic challenge that we all face, which is around climate change and them having to hit quite stringent emissions targets. And whilst many manufacturers I know were on track to achieve 2020 emissions targets, actually, some weren't, but I think the bigger challenge is, you might be able to hit 2020, but will you be able to hit the step down in 2025? So that clearly is an issue, and if you've got fines that are going to make the situation worse for our manufacturers at a time when basically, they've clearly seen a significant dent in their financial results because of COVID, because they've just not been able to deliver vehicles. That's going to put them under significant pressure. So, this is one of the biggest sectors in the, it's the biggest sectors in the world. And if you look at the UK, was it 823,000 people that work in this sector out of a 26.5 million workforce? So the automotive industry is a material part of the UK and global economy. It provides a significant number of jobs. And I think the reality is that it's going to be a challenging time for them to be able to stimulate the market themselves. I would hope that the government recognise this. I think, generally the government have done a pretty good job, I think, of trying to protect the economy. And I think, the work that Mike Halls at the SMMT and Sue Robinson at the NFDA were doing there's been a joint working party with those two organisations, which I think is a really good thing. So well done to Sue and Mike for being able to enable that to happen, because ultimately manufacturers and retailers' interests are aligned. We all want the same thing: sell loads of cars, parts and hours, and make sure our customers are happy. You have the occasional pressure that comes in on things like target negotiations, investment levels, but by and large we actually are aligned 99 times out of 100. I think if Sue and Mike and everybody can get behind some sort of stimulus from the government, be that scrappage or be that some sort of grant, then I think that's a good thing. And you will have seen last night the German government are talking about some sort of grant system there. I think a grant thing, some sort of grant would be better in my view, because scrappage doesn't necessarily benefit every single manufacturer. So, scrappage clearly benefited certain manufacturers in the last, post the financial crisis. But we didn't see many customers, part exchanging their older vehicles for, say, Range Rovers. So, is that necessarily fair for Jaguar Land Rover? Probably not. So, therefore, I think a fairer scheme to stimulate all manufacturers across all of the sectors would be some sorts of grants, but that's just my personal view.
No, it's a good point. It is a very good point. Like you say, the last scrappage scheme did, like you say, enhance certain manufacturers' market share at the time, because it was focused on a certain area of the market and not others. So no, I'd agree with that one. So in terms of these totally, as the overused word, unprecedented times, from a CEO's perspective, what do you think are some of the key learnings from this experience, other than having 10 barbecues before June? And congratulations, by the way, on AJ's 21st birthday as well during this lockdown period. And the other benchmarks that you've got, because I think you probably had one of the biggest webinar conference colleagues calls on record. I think God knows how many people you did have on one of your colleague calls. But are there any key learnings that you think your key takeaways from this experience that we've been through as a CEO?
I think a couple of things. One, I think it's been fantastic to see the sort of team spirit across all of the CEOs across the dealer groups. The camaraderie with our manufacturers has been fantastic, and also the spirit of our people. Isn't it funny? It's funny. I'm in Cambridge Jaguar Land Rover at the minute, and woke up this morning, couldn't remember how to do my tie actually. But I think I've gone around all the businesses, and we've got sort of 6 franchises here, and it's great. People are smiling, they're happy to be back. And isn't it funny? Normally when we're at work, we're all sort of, can't wait to retire, can't wait to go for the weekend. And actually, I think what people have realised through this period is actually the camaraderie and the friendships and the relationships that you have through your working life. Work is an important part for people. It's not just about providing an income to be able to live. I think as human beings, I think you need that sort of social interaction on a day-by-day basis. So I think that's really important, and I think people throughout this whole period will make their own conclusions. And I think my sort of thought would be is just how we act with other people and how we behave with other people is the sort of thing I would say people should consider. And how you behave and how you treat other people, it's really made me think a lot about what we do at Marshall and how we operate as a business. And I think we've always had a fantastic culture. You would have seen in the lockdown period, we also celebrated a 10th year on Great Place to Work, 6 years running now in the best UK workplaces. So I think we've always been very, very good at looking after our people. And I think the lockdown period has really got our people even closer. And that sort of communication piece is really important. But it's what impact do I have as a leader on my business and for my people? I think it's really important. And that conference we had last week, we had 359 people logging in, but we understand there was probably about 450 people who had actually dialed in to have that conference. And we'll be doing another one on next week on the 11th of June as well, just so we can keep the guys focused on what they need to do. And
do you think it's clearly demonstrated this, where you've given so much to your colleagues, your people, haven't you, over the years? As you say, it's constant. Do you think this has been where they've given back? Do you think this has clearly been? I mean, they've always given back, haven't they? But do you think this is really, as a business, do you think it's really shown the benefit of the close working relationship and being the best employer and things like this in the industry? Do you think this is clearly now their time that they've really given back to you and their colleagues?
100%. I mean, we've been very generous compared to what we know elsewhere is happening in the sector. So elsewhere we know there's wholesale redundancies going on. I think that's quite well known in many other businesses. Elsewhere, people have applied the £2,500 cap through the lockdown period. Elsewhere, they're just passing through 80%. Some companies didn't even pass through sales commissions because it wasn't clear that you could definitely get it. So it was a bit of a risk. There's no doubt about that. But so we looked after our people. We paid them 100% in March. We supported them in April with 90%, 85% in May, and we didn't have a cap either. So there is we have 120 plus million payroll. So from that perspective, to do those little things on a small percentage is a big number. You can work it out. It's 7 figures plus, multi-7 figures plus. So I think my view, very simply, is this company has been successful because of the fantastic people we've got working in the organisation. So at a time when our people needed the company's help, the company was there. I've got to say, the board and the shareholders, I wondered whether I might get a few eyebrows raised from shareholders. In fact, quite the opposite. The shareholders were fantastic, said you've done absolutely the right thing to support your people because you'll get this back in spades, and I completely agree. And then, by the way, that wasn't the reason we did it. We did it because it was absolutely the right thing. And as I said, the company's been successful because of the fantastic ethos and work ethic and culture we have in the organisation. Our people needed the company's help. The company was there for them, and now we're opening up. The company needs their help to maximise every opportunity so that the company can be here, for the next 110 years. And I'm very confident that with the culture we've got and the people we've got, we're going to get through. And I think when you look at the financial position we are as a business as well, we're going to be one of the winners in the long term, no question.
And finally, Dash, and you might need your crystal ball for this one. With showrooms reopening from today, what are your expectations for the car retailing sector in the short, medium, and long term?
I think we've all talked about consolidation for years and years. And I've been a big believer that you're going to see the number of outlets reduced by probably 20 to 25% over the next 5, 6, 7 years. I think what COVID-19 will do is I think that will accelerate that consolidation to the next 2 years. I think we'll see some dealerships just simply won't come back. And we've already seen some examples of that in the press, which is a real shame for those people who are affected. So I think this is going to accelerate what probably was coming anyway. And I personally believe in 5, 6, 7 years' time, we'll look back and the COVID crisis will be the catalyst that has effectively driven a significant landscape change. And what I believe will happen, there'll be probably 5, 6 super groups out there with revenues of between 5 and 10 billion. And I do believe we'll see the first 10 billion turnover group in the next 5 to 7 years, I believe.
And will you be one of those super groups?
Yes, 100% will be one of those super groups.
Yep.
No question.
Yeah, wouldn't have said it if not.
I thought you'd say that.
Yeah, I mean, fantastic, Dash. And I mean, all it leaves me to say is thank you again for coming on and for sharing your thoughts and some great observations there throughout that. And I think the early days on the return to some kind of new normality, but I think it's clearly demonstrated that your people are up for it, the business is up for it, and you certainly are. You are certainly up for it. I think you've probably had enough barbecues now for the remainder of the year. I think you're probably barbecued out now, aren't you? I suspect. And
I can't be a barbecue. My wife's grateful. My kids are grateful. So, and it's my contribution towards doing the house stuff. So there we go.
No, it's great. It's great to have you on, Dash, from a personal.
Yeah, guys, good to talk, and well done for the job you guys have done. I think one of the observations I've made is a number of people, such as yourself, have done a really good job of keeping colleagues who are furloughed engaged and understanding what's going on. So congratulations for the work that you guys have done as well. It's not unnoticed, I'm sure, within the sector. So well done.
Thank you.
Yeah, no, many thanks for joining us, Dash, and good luck to you and the Marshall team for a successful restart. Unfortunately, that's all we have time for now. You've been listening to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Please like and share on social media, as it's important during these times for the dealer community to work together and share experiences and best practices. Many thanks to you for listening and supporting the podcast. Philip and I will be back with the industry headlines on Saturday, but do watch out for more special podcast interviews as we work through this crisis. So until next time, stay safe and stay well, and good luck with the restart from Philip and I.